Today's session started with trailing range. And how do we identify trailing range? Well, the hallmark of a trailing range is indecision. You can see there is no clear uptrend or no clear downtrend, just a lot of price swings swinging up and down through this 21 bar exponential moving average. Also, we can see that the EMA is working sideways. It is completely flat. During the overnight session, EMA was pointing down, and right now it's completely flattening. And every single trailing range is always bounded by two extremes. And how do we identify the key levels? Well, we generally want to select the high of the day and low of the day key level. The low of the day key level can be identified fairly quickly, but if I'm going to select the high of the day key level, you can see I have a lot of empty space at the top here without any reaction of prices. So this is really not that useful as I would like. If I'm going to take a step back, I can see that the prices are turning down at this particular price level. So what I can do, I can plot resistance line at this particular level, and you can see it's getting some reaction. So we spike down, and right now we're working in a trailing range structure. And according to trailing range rules, you buy low, sell high, and right now prices are correcting off of these highs and they're on their way down. First, when I was watching this today, I had my channel tight like this, but as prices continue working lower and they offered us a geometric formation confirming the wider downtrend, this is where I have to redraw the wider downtrend. At the end of the day, we're coming off the highs of this trailing range. Now, as I'm identifying the main context, I also want to identify the shortened trends. For that reason, I'm using these channels because I want to stay on the right side of the market. I don't want to jump the gun too quickly. I want to make sure I'm following the prices precisely where they're heading. And I want to take a high probability setup. Okay, high probability setup is a variation of a two-legged pullback. It's not a setup that works every single time, but it is a setup that has higher chances of succeeding if you take it with the proper market context and at the proper key entry point. The goal of price action trading is to just identify the context properly, to look for possible key entry points, and only after your key entry point is confirmed and you get a high probability setup, this is where you can take the two-legged pullback. Now we have new high, first entry long, pullback, second entry long failure. You can't take long because it is far away from EMA. You can't take short directly into EMA. Notice what we have. We have lower high setup, confirmation of this failed second entry long. Now, when I was watching this, I didn't like taking this setup. Why? Well, notice on the left, this uptrend can still get new extreme. And you'll be wondering, okay, Thomas, but why are you not drawing it tight like this with the break in new high? Well, this would make this trend line really tight. And this was quite a strong move up. And I want to make sure I'm not selling prematurely. For that reason, this saved me today. Otherwise, it would have been a great lower high. Because when I was watching this, I expected a stronger bullish momentum. You never know what's going to happen. So I really wanted to see a trap. I wanted to see another failed second entry long. New high, first entry long, second entry long failure. Counter reset, first entry long, second entry long failure. Had there been a nice bearish bar below EMA, this would have been a great failed second entry long, confirming two key entry points below trend line, below EMA. Notice prices kept pushing above EMA and a failed second entry long formed above exponential moving average. So this is right now confusion. The bearish momentum is not that clean. Eventually, market continue pushing lower. Okay. So once you see prices continue pushing lower and quite strongly all the way down here, you're almost at the middle of the trailing range. This is where the main trailing range rule is coming into play. You expect the prices to go from these highs all the way down to the support. So that means that it's probably going to be a slightly wider channel. So if I'm going to connect the first two swings like this, I'm just going to copy, put it at the bottom. You can see we have quite a decent downtrend working lower. Right now we have 10 bars stacked right next to each other. And this is a congestion. The way we trade congestions in price action is we want to fade the breakout or take the breakout pullback with the direction of the trend. What is the fading the breakout? It is just trading the breakout against the direction of the breakout. So we broke to the upside. So fading the breakout means selling it. But we only want to fade the breakout with the direction of the trend. And what is the trend? The trend is down. So we would be fading it with the direction of the trend. So this is good. And also notice the new low, first entry short, pullback, second entry short. So this is a second entry short. In addition, it is a failed breakout out of the smaller trailing range. This congestion is basically a smaller trailing range. Acts as a big trailing range, but it is a small one. So these are two reasons to take a setup, and it's confirming key entry points, great high probability setup to take. Now my signal bar is not really great bearish one. It is still decent, but definitely if you have better bar with bearish body, it is definitely a great setup to take. Now notice shortly after formed lower high. Now lower highs and high lows are confirmation setups. They confirm the earlier high probability setup. Maybe you're unsure or the signal bar was not that great on the two-legged pullback. Just for whatever reason, sometimes the price is stall and lower high, higher low is generally a confirmation setup, and market gives you more information. So this lower high confirmed the earlier second entry short. The context and the pattern remains the same, but notice you're back into this congestion. Now this setup worked for a scalp, and this was very tempting because this time you get nice signal bar, but you're back inside of this consolidation, a lot of bars stacked, and the trailing range even expanded a little bit. I can just draw it a little bit higher because at this point on it got a little bit larger. You really don't know that you're going to push lower. You basically have to be mindful of these lows right here because it's a congestion, and remember, you don't want to take setups in the middle of the congestion. Now shortly after prices broke, there's a break new high and market created new extreme, which is following the trend line rule. After this break of this downtrend, prices expect to form new extreme. So we have a new extreme for this downtrend, but the bias right now is bearish. Notice we spike down into this trend range. So we started the day with the bearish downtrend, and right now we're coming off the highs, probably all the way down to the support. So there is a still bearish bias in this market. We have a new low, first entry short, second entry short, the two-legged pullback with the great bearish bar at the EMA. Can we take the second entry short? We cannot, because right now we had break and a new low of the earlier downtrend, and this is too early for me to take a second entry short. I would need to see a lower high confirmation setup or possible double trap, and notice we have double trap here. Everybody who went short too early just got trapped. And this right here is a great signal bar. This is a great high probability setup. I like taking this setup right here. It just stops you by one tick, but that happens. It's a great signal bar. It's a great setup overall. Now market shortly after formed congestion. 1, 2, 3, 4, 5, 6, 7, 8 bars stacked, 7, 8 bars stacked next to each other. And we have repeat pattern of this right here. Here we have break new high and a second entry short, fell breakout, which by the way is not a bad setup at all because the downtrend is new low and is a fell breakout above this congestion, but very hard for beginners to spot because it is quite a ways above the EMA. However, now I can use the same pattern here and basically copy it because repeat patterns work in price action. And this is a second entry short and also fell breakout out of the small congestion and basically acts the same way. Plus the bias is bearish. So this is a great high probability setup. And once again, notice you have a lower high confirmation setup. This lower high is confirming the second entry short here. This lower high is confirming the second entry short here. Okay. Is this a good lower high to take? Well, notice how it formed. It's basically still part of this move down and there is no bullish bar pullback in between. These lower highs generally tend to trap you. I don't recommend taking it. There's a 1 micro tick high, reversal down. There is no bullish bar in between. It still acts as a part of this bearish bar, closing quite low. These will get you a lot in the future because I call these also a steep lower highs. You generally want to have a bullish bar in between, kind of like a pullback. The bulls are going to get trapped. Who's going to go long above this bar right here? So I don't really like going short here, but you can see at least you're reading the context overall correctly. Now market continue working lower. As you can see right now, you're bouncing at the support, and this is why it's important to identify these key levels. Okay, the price action works this way, and you're not drawing these key levels just for the heck of it. There's a reason to every single price movement, and you can see what's going on here. You can see the consolidation here. Buyers are buying at these lows, while the sellers are still betting on the residual bearish bias, selling directly into these lows. Now notice what's happening here. Every single time prices bounce off this support, they failed to stay above EMA for a long time. Push down, push down, push down, push down. They eventually push higher, but very minimal bullish momentum. And also, if I'm going to take a step back, so many consistent lower highs and so many consistent lower lows. If I'm going to combine it with the fact that we start with the push down to this trend range, there is no denying that there is stronger bearish bias. So I can do a possible look for a slightly stronger downtrend like this. Now you don't know it's going to get confirmed while you're trading this. Okay, you just know that you're bouncing at the support, so you cannot take any entry short directly into these lows. You have a nice second entry short here, but it's not touching the EMA and it's right coming after bounce of the support. So I can't sell here, can't even take this short right here because it is right into the support. No matter how tempting the signal bar looks, how strong the momentum looks, once you have a small consolidation at the main support of the main trend range, you have to calm your instincts because this is where your common sense will work against you, because your common sense is telling you, notice we've been working down the entire time. We have to push lower eventually, but that's not how price action work. In price action, you always want to make sure you're selling high. And there's always going to be the correction. You're selling high. Here you can sell high. You never want to be chasing the market all the way down while it's pushing lower. So there is no short here, and there is also no long setup given the main bearish bias. Now this was quite tempting high low. This right here, when I watch this, it formed above EMA so nicely. It's really indicating that a lot of sellers are going to get trapped, because this bearish bar probably suckered in a lot of sellers. But you have to respect the congestion rule. It's better not to be gambling inside of this congestion. Now there's a short option working higher. Now when I'm watching this, I see first leg up here. So I'm just going to copy it, put it here, and I expect for prices to form a second leg. Now there's also a failed breakout here. Now, why I don't like taking this failed breakout? Well, because there's a short-term uptrend, but why am I resorting to drawing the short-term uptrend? Because we've been working sideways for quite a long time, and once I see prices testing this low so many times, this basically allows me to complete the reset account here and redraw a brand new uptrend, because this is really where the uptrend will start. So because we've been working sideways for such a long time, I'm going to make sure I'm redrawing the channel, because I don't want to sell too early. Also, some momentum has been building up down here at the support, so I don't really want to go short while the momentum is breaking to the upside. Now finally we have a break, new extreme, and now you finally get a confirmation of this main channel, but there is no lower high. There's pretty much no safe way for us to enter here. Just market completely reverse all the way down, but you can see there's a nice bearish bar, but pretty much, you know, after such a big bull bar, you really want to see at least lower high, but never fall. Market continue selling off strongly and massively reversing back up. Now we have another sell-off, and right now I don't see any high probability setup. I just see small break, new extreme of the downtrend, followed by a massive push to the upside. So I'm just drawing the short-term channels. This one doesn't have new high. This has a small break, new extreme. I have another push higher. And right now I'm pushing back above this important key level. And this uptrend right now needs to get new extreme according to rules. And notice how strong this spike was. So this right here is the new short-term uptrend, the new short-term channel that I'm paying attention to. And we have new high where we set the count. First entry long, pullback, second entry long, and also new low. First entry short, pullback, second entry short. Now, initial second entry long formed above this doji bar, which I don't like going long here. It's not fully at the EMA, and it's a doji bar. And there can be a little tick higher, reversal down, fully confirming the EMA. But notice what happened. Shortly after, there is a much better bullish bar confirming the initial second entry long. And this is double bar confirmation. It acts that way. EMA kept holding, this kilo is holding again. And this makes this setup now much better, because it right now allowed you to enter with a much better bar. The confirmation that this doji was a decent setup, but I would not enter this doji. I would wait for this second entry long with this bullish bar. And notice clean two leg pullback. You have first leg down, second leg down, and market created new extreme, which means you cannot take any long after this fact. You have a new extreme and prices continue working lower. Okay, so at this point on, the bulls completely gave up. Because notice, if you're playing the trend range, notice how prices are creating smaller and smaller pushes to the upside. Basically, if I'm going to plot the midline, you can see bulls are not even strong enough to reach the middle of this trend range. So this is a sign that the prices will eventually continue pushing lower. This is generally where you don't want to be fading the breakouts of the main trend range. You can see you spike down, you're going sideways for a bit, and then you continue working lower, and each new low is lower than the previous one. So this is a good sign that there is bearish bias in this market. You can clearly see how prices are forming each new high lower and lower and lower. So prices are eventually breaking lower. I'm just going to quickly make this a little bit shorter so it doesn't clutter our chart. Now prices are continuing working lower. We have a little bit of an overshoot. We have a downtrend working lower, small break, new extreme. And here we have new low, first entry short pullback, second entry short. Now, you have a new extreme. Can you go long? Well, you definitely cannot take high low, because if you want to go long, you at least want to take a failed second entry short. Okay, but overall this bias has been so bearish given all these lower highs and lower lows. You don't want to be going long too quickly. In fact, if everybody going long on a high low here just got trapped, it took one tick high, reverse down. This is a second entry short, while the option has a break attempt to create new high, and also it can act as a failed breakout above this trend range. First entry short, second entry short, also failed breakout. EMA keeps holding. I'm going to mark it, but it's more aggressive because the bias is not the cleanest. The channels for the most part have new extreme. You're just basically betting on the main bias, which is you're feeling that you're going to push lower. The only thing here is nice that the bulls got trapped on this nice bullish bar, and it's also a failed breakout. If this wasn't a failed breakout right here, it would have been much more of a gamble. Now market keeps working lower. Okay, once you keep pushing lower like this, and the main downtrend already has a new extreme, this is where I'm going to zoom back, and probably there's going to be a bigger downtrend, because this is right now basically a strong downtrend working lower. So I'm going to resort to downtrend like this. Now, this may not give you a key entry point with the high probability setup because it is quite big. You may not get it, but a lot of times I like using these bigger patterns because they allow me to spot extended push phase, because it is very typical for traders to zoom in on just the shortened price action down here, but they're not taking into consideration that there's always a push phase and always a correction phase. And sometimes you can get trapped taking a second entry short down here while the push phase is overextended. So this is why these big patterns are useful even if you don't get a bounce at the highs. I'm going to redraw the short-term uptrend with the break new extreme, indicating that buyers are over. You have a second entry short, but it's not a good one. However, we have a lower high confirming this second entry short. Once again, lower high acts as a confirmation setup. If something is wrong with the initial second entry short, we had quite a few confirmation setups today. Is this a good setup? Well, notice the flat EMA in the middle of these bars. 10 bars just going sideways, completely flat, middle of the congestion. Don't really like taking this. It is still part of this congestion, even though it worked. So many stems, so many dojis, EMA completely flat. I mean, quite aggressive, and market keeps eventually working lower, and you can see now it's way too late because market closed. So this is how to follow the price action. I'm gonna wrap it up. I'm gonna see you guys in the next one. Take care, everybody.